This simple move could save your family thousands in inheritance tax on your pension. So let me explain what's happening. Right now, your pension sits outside of your estate for inheritance tax purposes. That means that your beneficiaries can inherit it tax-free, although they may pay income tax when they withdraw. But from April 2027, your pension will be then included inside your estate, which could mean paying up to 40% on everything you've saved for. A quick inheritance tax recap. An individual's allowance is £325,000. Now, if you own a property at time of death and you plan on leaving that to direct descendants, then your estate can also claim the Residents Nil Rate band. That's an additional £175,000. So this is bringing an individual's total inheritance tax allowance up to £500,000. And if you're a couple, that makes it £1 million. Thing to watch out for, though, is if your combined estate is worth more than £2 million, you will start to lose the Residents Nil Rate band, meaning more tax is payable. So what does this mean for your pension? Most people would currently name their spouse as the first beneficiary of their pension, but that might not be the most tax-efficient option. If your pension goes to your spouse, it will then increase their estate's value for when they eventually die. Now, right now, that's not an issue, but from April 2027, it could be. And when they pass away, if their total estate, including all the pensions, will be assessed for inheritance tax. And if this pushes you over the £2 million, you will lose the Residents Nil Rate band as well, paying even more in tax. So what can you do? Instead of leaving your pension to your spouse, consider naming your children as beneficiaries now. This could prevent the estate from eventually growing too large after the first death and reducing the inheritance tax burden. Thing to remember is this only works if, after one of you died, the other surviving spouse would have enough assets or income to live on. And of course, if you both live past April 2027, then this strategy won't apply. Estate planning is complex and ever-changing, so speak to a financial advisor to see if this strategy could work for you.